This podcast is sponsored by Capter IMS, an affordable agency management system and CRM, built by agency professionals for agency professionals. Check out the free trial and the low early adopter pricing at www.capterims.com.
5, 4, 3, 2, 1. And so we're back. This is the Yellow Book Road podcast. So I got my good friend, I have my fellow insurance nerd and insurance author, Bryan Falchuk, on. And you can see from his background, like there's a lot of green stuff going on. His head is actually hiding the topic. There you go. The topic for
it just looks like
yeah. I like that. It's like a
placement.
It's a crown.
Yeah.
But it's you can see in the background it says the future of insurance, and that has to do completely around his new book, and that's what we're going to be talking about. And Bryan, awesome to talk to you.
Who named your podcast?
You did.
That's right. I had to get that out publicly.
Yes, I kind of owe you on this one.
Right.
I had been toying around with the idea of the Yellow Book, like, oh, I want to do something around the Yellow Book because insurance professionals will know what that means. And you were just like fooling around. You're like, the Yellow Book Road. I was like, I like that.
Well, and you need you should end every episode with the push for people to subscribe as I can remember, follow the Yellow Book Road. Only you actually mean subscribe, right?
Yeah. And I never do that because I'm not as smart as you are.
You're just not as smooth. I'm not smart at all, but I'm insurance smooth, which of course means not smooth, but in insurance, very smooth.
Yeah. Yeah. You're like the cool kid in a population of uncool people. But still, I always want to be the big fish in the small pond.
That's the nicest thing anyone's ever said to me. I tell my wife that later when she puts me down and be like, oh yeah, well today I was told I'm the cool kid. I'm just going to leave the rest of it out. Just leave it at the cool. I'm like, I don't know. Zoom cut out after that.
Yeah. Yeah.
Sorry. I should just have said hi.
We are recording this on a late Friday afternoon.
Can people tell we're punchy?
What people don't know is that you and I actually we book time together every Friday afternoon.
Every week.
Every week to talk about insurance and what we're up to. And we spent a little bit of time talking about your book, and we're like, let's get it on the show and give it its proper publicity on it. But there's a lot of good stuff in it because I happen to know that. Yep. I know a lot of who you interviewed for the book. And so let's just start off for Bryan, in case anyone that's listening, take this the right way, does not know who you are.
Yeah.
Why don't you give a quick elevator pitch, and then we'll go into the Q&A.
Sure. I'm Bryan Falchuk. I've been in P&C specifically for 21 years, I think, technically. My career can drink this year, which is very exciting. I don't drink, but my career can, so there you go. I've worked at carriers. I worked at McKinsey for a while, serving carriers, and then I had been head of claims for Hiscox in the U.S. and was an early customer of an Insurtech called Hi Marley. They raised their Series A and asked me to join, and I joined the party for a year to help them grow. And then right before the pandemic, I was like, what would be a great idea? Let me go off on my own and try to help other startups and carriers kind of navigate all the change going on. And not the smartest time to start your own business when the world locks down, but actually it worked out really well because it gave me some time to work on this book that had been kicking around in my mind about telling case studies of carriers who had moved forward despite all the complications and constraints and barriers and headwinds and lots of other words that sound like something hard to get through. Because I think generally when we hear stories of people who have faced a challenge or businesses that face a challenge and they get through, it helps inspire us to see, well, how can we do that ourselves? And that kind of started things off. 2020, putting this book out, The Future of Insurance, Volume 1. It's now called Volume 1, The Incumbents. It was just called The Future of Insurance back then. But it got a nice following, and then I just felt like we got to tell the other side of the story, and that's the startups, and that's what brought us together today, Nick.
Yeah. So do you feel like Led Zeppelin at all? you release the albums, and like it's volume 1 now. At the time it was something else, but now you have so many of them that we have to refer to them as, you know, Led Zeppelin 1, Led Zeppelin 2, even though there's not a number there, or the White Album, right? Like you know,
Well, and the first one's
we have to
the
start
green
referring
one.
to your books by these you know, in hindsight.
Yes. Yeah. They've been changed posthumously. But so the first one's the green one, the second one's the white one. So maybe that's the White Album equivalent.
I love that. I love that. You can, is there, you got to have a section on like Rocky Raccoon or something like that.
Yeah, maybe that's like the epilogue. And just like I had to take credit for the name of your podcast, or maybe just adding road to the end of your idea. I have to give you credit for the color idea, because you were like, you know, you can have like the green one and the white one and the blue one and the whatever. And they can all start to, and then you have this like multicolored, like Jacob and his Technicolor Dreamcoat, you know, kind of menagerie of Bryan's books about insurance.
But there's only one color you can't have.
Yellow.
That's right.
Is that right?
That's okay. Reserved for me.
That's fair.
So, okay.
Yeah.
So you brought up the prior book. So, what I like about how you structured the first book, it's, I wouldn't say it's original. I think it's been done before, but I hadn't seen it done in a, insurance, you know, in some of the new insurance books that have been out, or fintech or whatever, where you did more of like an HBS style, Harvard Business School, right? Where you went case study by case study. So, which is like interesting, because it's like you sort of laser beamed into a company doing something in a particular way, solving a particular problem within the company. So I felt like it gave a really good blueprint for, I was on a forum yesterday and on microservices. And someone from a small insurer asked, like, how do you even start? Like, where do you start? How do you even, you know, go through the process of starting? And I thought your book was a kind of a good blueprint in the use case format to kind of show how a whole bunch of other companies have done that. Did you repeat that for book 2?
Kind of. So the general framework, yes. What's different is the first one was, because they're incumbents, these are going concerns. Like, these businesses are already around. They already have their operations. I'm not going to tell a story from like the 1800s when they came to be, because most of them are over 100 years old. One of them is about to turn 100 years old. That's USAA. All the others were over 100. That's like USAA is the youngster in the group at like 98 years. But so, you know, because they were all established, it was just this one particular thing that they did. And that one thing may be really big, but it's like, let's tell the story of this thing that they did, why they did it, what they were up against, how they got through, where it led to. The second book is 8 startups. There's no one thing that they did. It's the whole thing. Like, it's the story of the entire company. So it's less point specific about, like, you know, Employers, one of the companies in the first one, like their APIs for their alternative distribution and digital distribution solution. Like, that's a pretty specific thing that they put in place. Versus like Neptune Flood, the first case in this book, it's like the whole genesis story of the company, setting it up, what Jim Albert went through to build it, and like when his partner Bill Martin was involved, and then Bill got a job offer to go be CEO of Plymouth Rock's home business. So he left, and then Jim's like, that was my insurance expertise. What do I do now? Like, how do you navigate that and navigate, you know, putting out rates and forms and getting capacity and the ups and downs of getting backing, financial backing, so you have runway, like all of that. So the whole soup to nuts journey of that startup, that's the point specific story in this case. It's everything. So the cases read a bit differently because they're much less specific to some issue, and therefore the lessons may feel broader. But I think they're like, I actually got really into it, and I do this all from firsthand research. So like, I'm with the founders, talking to them, like hearing what they lived through, and then sometimes some of the partners they had, like with Thimble Insurance. I know you've interviewed Jay before. I got in with the folks at Markel who backed them financially and with capacity. And so like hearing from Markel's side of what it was like and bringing that in, there's a guy named Scott Whitehead there who's awesome. And it's just really like, it's fascinating to me. I love digging into these stories. I love telling the stories. And from there, you pull out all these lessons that I don't care if you're a startup, an incumbent, a VC, a service provider, like it doesn't matter exactly what context you're in. There's something you should be taking from that. Just like in the first book, like one of the cases was CNA putting Shift in to deal with fraud. It doesn't matter if you're like solving for fraud in your situation. There's stuff in that case that's going to be relevant to you, regardless of what specific thing you're working on or what your business looks like versus what CNA is. You'd be like, oh, it's nothing like me. That I'll skip this one. It's much more complex than that. There's lessons we can take from all of these stories. And I try to tell them in a way that, like, yeah, it's like a business school case, but it's maybe a bit more conversational. Like, I'm sure Harvard would not accept any of my case studies into their case library because they're meant to flow more and just be more like, I hope they're enjoyable reads. And that's generally like hearing from the people who lived it. They've all read the cases before they go live, and a lot of them are like, this was just really nice to see someone retelling our story in their own words, and like I enjoyed it. It brought me back to those some good moments, some tough moments, but reliving their passion, which is really cool.
Yeah. It's like a mix between HBS and its formality and like Malcolm Gladwell, like putting a narrative
I'll take
around
all
it.
of that. So sure.
Yeah.
And
So
I
you can
didn't
tell
say
your
it.
wife
So I'm
that too.
not, I think I'm just going to limit what I tell her because she's just going to laugh either way. But that's
There can't possibly be a guy out there that you have fooled so badly. But I think what's useful for listeners to potentially get is book one was the companies that were established, right?
Yeah.
And so you got these larger companies, leviathans, right? Like they would self-admit that, hey, it's difficult for us to get stuff done, but we got something done.
Yeah.
And what's useful is like I keep going back. I'm going to keep going back to that person in the forum I was with yesterday. Like, how do you start? Well, there's no easy answer to that, but here's a whole bunch of ways that companies have done it.
Yeah.
Right. And so book two is for this burgeoning market that's occurring of companies that are either going the MGA route or the insurance route. They're taking risk or making bets. There's an underwriting, there's going to be an emphasis on the underwriting element and making sure they make money there, and all of the facets they have to go through. And because I get the same questions all the time, how do you start?
Yeah.
It's like it's eating an elephant. It's one bite at a time. And now you've given case studies for a whole bunch of different ways for how companies have done that. So let's break down who's in the book.
Yeah, and thank you to you for making quite a few of these intros so that they could be in the book. So I got to give you credit there. And I need to look at the.
So are we even? I need to make sure, because I thought I owed you now. But
no, I think I owe you quite a bit. No. Okay. I think you're still ahead. So we got Neptune Flood, who I mentioned, Thimble that I mentioned, and that was a Nick Lamparelli special. Clover Health, which shout out to the guys at Insurtech New York for making that intro. Kin Insurance, homeowners carrier. Beam Dental, which was another Nick special. I heard your interview of Fro, the founder there and co-founder there, and was just like, he should be in the book. That would be super interesting. And the first non-PNC case that I have, which was really cool. Clear Cover, Branch Insurance, which I think was another. Is it? No, I think that was the Insurtech Ohio guys.
Yeah, you did it on your own, but I could have made the intro.
You could have. We'll give you like 50%. We'll give you half of it. And then the last one was Next Insurance, and Next was the only one where I didn't talk to the actual founder directly. I have some quotes from Guy in there, but I had gotten to know Sophia Pogreb, the COO, through some of the work I did with Reuters, and she and their comms person Carrie were amazing. Gave me way too much of their time.
Well, she's so embedded in what they have become and where they're going,
And she was there really early, so like
yeah,
she missed
it's
very
as good
little of it.
as as good
Yeah,
as
yeah,
it gets. Yeah.
yeah. And I probably got more of her time than I could have gotten of guys. So, you know, in reality, like that was the right answer. But yeah, I got really deep. Um, and again, like you can write a lot of this stuff from just reviewing like press releases and news pieces and whatever, and that's fine. But we've read that stuff.
Yeah.
And I didn't, you know, I had a carrier for the first book that was like, you know, we're too busy, you know, to give you access to this executive, but here's 10 press releases so you can put something together. And I wrote a case and it's like, it's fine, but I just felt like, why would anyone pick up my book to read this when they've read that stuff before? So it's like from the first book, it's been really explicit. This is firsthand. I interview these people for hours, like got into the stuff pretty deep. And the interesting thing is like, I'm in the process of interviewing most of the founders for my podcast. And we talk about different stuff. Like, it's kind of funny. A clear cover interview, I was like, do I need to go change the book now? I was like, this is just different from what, and it's different because we're getting into different pieces of the business. But, yeah, like Kyle and I talked about stuff that we didn't even discuss really for the book. That just goes to show like, there's just so much in these stories. You know, each one could be its own book in reality, but they're not. They're, you know, try to make them digestible. And I think the variety is really valuable.
Yeah. So I think I know a lot of the backstory for a lot of these stories. Did you find that there was a common theme around it? And I'm particularly, I'm always curious as to that decision of, do we go MGA, do we go carrier, or do we use the MGA to get to a carrier?
Yeah.
How they're making decisions around. To me, that's like the critical decision that has to be made at
Yeah.
some point, and how they plan for it. What do you think were some of the common threads around how they made decisions, and or was there a common thread?
Well, so each one of the cases has its own takeaway lessons, 3 to 4 or 5 of them per case. But then I try to distill like, what are the meta lessons? This is the same thing I did with the first book. I call them foundations for the future. Each case has them, and then there's the 3 like big ones that transcend all the cases. And there were clear ones in the second book, just like there were in the first. And by the way, the lessons apply from both books to the other you know, the other cohort. So like the startup lessons also apply to those incumbent carriers and vice versa. So now you got like 6 beefy lessons that like, how do you start? You do all this stuff and it matters. To your point on the MGA piece, and I know that's really critical and important to you specifically because of your experience. This is really common. Like, no one who's a carrier in this book, some are carriers, some are MGAs. I try to use the word insurer to catch all, but some are carriers, some aren't, some are still MGAs. All the carriers started as MGAs. Some of the MGAs are saying like, this is fine. We don't need to change. The ones who have went to carrier, some of them are like, oh, that's what they're saying now, but I'm sure they will evolve at some point. Mm-hmm. Maybe they will, maybe they won't. You know, it's really interesting. In some cases, I think the MGA economics are neither here nor there. Like, there's such an investment from an operational standpoint and a capability standpoint, but the returns aren't what they could be from a well-performing carrier. So you're kind of trapped in the middle. Flip side is like an MGA can have really good economics. It depends like how your book's performing, what kind of deal you have. And it also depends how much of the operation you build out. I will say the ones who judge the MGA model tend to have built out kind of all the carrier operations that they plan to have eventually anyway. So they're running in a very expense heavy version of an MGA that you don't have to have. So I think it's a spectrum. There isn't a clear right answer in my mind, except to say that being a carrier takes a lot of statutory capital. It's not easy to get that in place. The way you build it is by operating a carrier, and you build it up over time. Well, that doesn't work for a startup because it takes way too long. And it's really hard and expensive to get investment dollars to just park as statutory capital you can't do anything with, and has to be invested pretty conservatively. So it's never going to meet the hurdle rates of a, you know, VC or like PE fund.
Treasury bonds, like,
right. Like
1% returns, 2% returns.
Yeah, that doesn't fly for a venture capitalist. So it's hard to start as a carrier. So typically, and that's why all of the carriers started as MGAs, and that got them a flow of business. They proved their model out, and that allowed them the space with investors to say, like, this has legs. Here's what the return will be. We're gonna, most of them do it through like debt or, you know, some sort of other structure of capital other than like a straight investment, like, you know, in your typical rounds that you see in the VC world. Just because that's economically, like, you would have to sell such a huge amount of your company to park as your statutory capital. It just doesn't work out. And Kyle speaks to that in the clear cover case. And it comes up again and again, but you see it like Kin had a debt issue. Clear cover had like a mix of debt and equity in one of their rounds, and that helped them set up, et cetera. So it's like, you know, there's different financial vehicles that you would lean on for that, but I don't know anyone who started as a carrier, because it's like, unless you're a billionaire and self-funding, it's pretty hard to make that work.
There are so few of them. You know, Lemonade comes to mind, but Lemonade had two co-founders with a lot of experience in the entrepreneurial world with multiple successful exits.
Yeah.
And so,
and their reinsurance
I actually, you know, I've been bashing them for quite some time around, like, they didn't need to form the carrier. And I think they wanted more control than they needed. And they could have done everything they do now in the MGA space and then transitioned over. Regardless, I think a lot tried to copy them. But there's a very important element of what you just described, which is, in an abstract way, the MGA is like a minimum viable product. You can prove out a whole bunch of stuff. The difference between insurance, like what you and I have been hammering home for a while, and traditional tech startups is, like you said, the MGA is still expensive.
Yeah.
You know, it's still probably, to get it off the ground and running and getting it to a successful state, 7 figures to do that. You don't find that with typical tech companies where you might be able to build an app to kind of validate some of the MVP related things for $100,000. You can't do that in insurance. It's a little bit of an all or none. Like, you need all 4 wheels to be able to drive the car. Three's not going to do it.
No. If someone who drives on 3 wheels, you don't want to insure them. That's a sign that they're reckless.
Yeah, and it's probably in Florida.
Nick, you know, there's a few other things that stood out to me, but that, like, so, you know, the MGA piece was one of them. But I think you bring up Lemonade. There is a really strong story, and it came out in the cases. But then I had Dan Reed, who runs AmFam Ventures. He wrote the forward, and this was one of his strongest points too. This notion that being a startup and having a clean sheet, and that's the linchpin difference between an incumbent and a startup. And that's why the incumbents are stuck, is because they have all of this like baggage and politics and et cetera, et cetera. So it's so hard for them to do anything. And the startups don't have any of that. So that's why they can win, or that's why they can get ahead. It really is not that simple.
Yeah.
That's not enough. A clean sheet is simply not enough. Yes, you have it, but I've been saying this a lot lately. Like, fast forward months, years, whatever the time is, someone else will have a cleaner sheet than you. So if that was your advantage,
very true. Tomorrow,
someone has a cleaner and God knows, like, there will be another Insurtech startup tomorrow. I'm sure someone will, like Saturday, but okay, maybe next week. Someone else will have a cleaner sheet. So anything you have built now becomes more baggage, good or bad, but it's there. And so, like, that can't be your only story. And I think for some, like, that has been their story, is we're new, we're different, we're cheeky, like we're sassy, we're easy to deal with. I'm like, yeah, but like, you're 15 seconds faster for a quote and you're both under a minute. You're cheap and you're really smart with your marketing, but like, your product's just ISO. No knock on ISO, but like, that's not innovative. Your price is $5 instead of $3 a month, or 20 instead of 22. Like, yeah, it's cheaper, but like, you're not really impressing me yet. The ones in this book had genuine advantage, and that became really clear to me. And I think it's something I took for granted, but I didn't realize how critical that was and how hard. It's really hard to do, and how hard these folks had worked on it. So in every single case, it's just so late. Like, your first episode of the show was with Branch, with Joe and Steve. And they don't really go into their material advantage all that much and in that much detail. They really don't. They kind of gloss over it, and it's much more. It's not a knock on them. But like they talk about purpose and aim towards that, like the purpose of lowering the cost fundamentally, so more people can be insured, and that is their mission. That's why they're doing what they're doing. But the way they've done it is mind-bogglingly brilliant. And I can't imagine anyone else replicating that. Any existing carrier, including startups, unless you're a clean sheet startup, I can't imagine others doing that. And by the way, I don't think a new startup is going to be able to do that from an investor standpoint. Like, I don't think it's going to get supported until Branch is really successful, because then it's like, oh yeah, that works, so we'll invest in that. I think that's like what they're doing on the capital and the exposure structure, and not looking at the pots separately,
Yeah.
blows my mind. It's like 1950 whatever with INA and homeowners all over again.
Yeah.
And literally
that's the sense that I got too.
Yeah, there's been nothing in the industry since then that's on this scale, and that within what, like 4 years, the entire homeowners market had completely shifted. I think that's what they've uncovered. I hope that they're wildly successful, because that is a total game changer for the entire industry. That's not just like we're new and we use this cool color and our website's nice. Like, that doesn't compute from a real benefit. What Steve and Joe have built, and done so with much less funding and fewer people than any of the others that like look around. They're a really small team with like a quarter of the Series A funding that, you know, any of the other like similar kind of startups got. It's really, really interesting. So it's things like that's what catches me, is like, how hard are you thinking about what you could do? Or are you just kind of iterating on the next step in what you've already been doing? And if that's where you're at, like, that's fine, and you may have some success, but fine and some success are not really what interests me. What they're doing is hard, and that may be scary, but like, wow, that is transformational. And they're joined by 7 others who are also doing things, and I'm like, that's really transformational. So I'm going to create like a super carrier that's like all 8 of these ideas and just bunch them together. It's going to be a smart toothbrush, entangled bundle, flood. I don't know. I haven't figured it out yet.
It's there's each one, I think, can really hang their hat on something that's differentiable, right? You can, like, we are different. Here's like specifically why we are different. To your point, like, I think Branch has done it in a couple of different ways. One is operationally, that the customer would never see. Right. But I almost think they're flying under the radar,
Totally.
in some regards. And I think, big kudos to Steve, having been in the insurance world before. He just knows how important it is to hit that loss ratio.
Yeah.
Right. And to him, I think there's that's like delayed gratification. Like, Branch could easily grow really fast if they wanted to, right? But they're
growing correctly.
They're very focused on, hey, underwriting profit. Like, it's and what's interesting, what I really like about Branch is, I'm going to say eating their own dog food, but that's not the right saying. Like, there's an alignment there with the reciprocal that they created. So they got carriers that they work with. So they're part MGA, part carrier. There doesn't seem to be conflict in that, which I think is a magical, like, if you do the MGA correctly, you don't have to give the MGA up. Even when you form the carrier, it can actually enhance
Next
not only your business and and your stakeholders, your partners, trading partners, that carriers, it can enhance both of those. But there's an alignment there. Like, there's no incentive for Branch to grow quickly. They improve the stickiness of the relationship with their customer by not doing that, and making sure that, hey, we need to keep these loss ratios down, and there are other insurance mechanisms that we can use to help us drive down the cost and get some proper economics on this. But if it ties back to the mission, try to get as much insurance out to the public. I see that a lot with some of your other cases. So you brought up next. I was thinking of Beam Dental.
Yeah, well, so when you're talking about startups and growing fast and loss ratios, like Beam is so different from what we expect. Like anyone who's been in a carrier, you know, like small book, growing fast, the losses are going to be a mess. It's just math,
It's inevitable.
right? Like it's not mature. The losses haven't smoothed. You're probably getting some adverse selection. Like growing a small book to scale is inherently you're gonna have bad losses.
There's a lot of finger crossing. Like
Yeah.
even with a pristine underwriting strategy, you have to expect that the losses are going to come, and that's just bad luck. You know, the law of large numbers has not benefited you yet.
Right. I mean, just while you're, I mean, look, I had the joy of one of the lines that I was responsible for earlier in my career. I'm not going to say the carrier, but it was a management liability book. It was small. It was young. It was like a $2 or $3 million E&S book. We also had an admitted book, but the E&S was running at an 800% plus loss ratio. Because like one bad claim will do
One
that
bad
whole
claim. Yeah.
But you don't just have one claim. So there were like 7 of them. It wasn't that bad, but it was like on $2 million a premium or 3, you know, whatever. Like, so and it was actually over 800. It just like, that's just as far as the chart would go. So it was like 860, whatever. So Beam has grown 600% in the past 3 years. They were really small. They're still small, relatively speaking, but they're six times bigger than they were before. Their loss ratio is 10 points below the industry.
Yeah.
That is real. So when other insurtechs have been fast growing or like their loss ratios are terrible and they're trying to explain it away, or they say like, we've got great loss ratios. And you're like, really? Because I'm looking at your competitors and their loss ratios are significantly lower. Like I expect a small, fast growing book to be bad. Beam is the opposite. They're kind of the only ones in dental who have an at least like marginally acceptable loss ratio. Like dental's not an easy market to make money in, but it's the way that they've gone about it. It's the smart toothbrush. It's the data that they're using to inform their underwriting, to inform how they interact with their customers to drive different behaviors, which in turn leads to better outcomes, which in turn leads to lower rates, which in turn leads to the customers wanting to listen more, so they brush better and they take the other advice, which leads to lower rates. It's this like virtuous cycle.
Yep.
Yeah, and so they're writing in like I think like a 74. I think it's a sub 75, like first half in the 70s loss ratio. They didn't pin it down exactly, but the industry's in the low 80s. So they're 10 points better than the industry despite growing wildly fast. Yep. And that is like, that's what Fro and the whole founding team was pitching to all these dental insurers, because they weren't going to start a carrier. They're an MGA, so they weren't going to start an MGA or a carrier. They were like, they're engineers. We got the hardware. We got this whole data story. Here's how you can put it to use. We want to help you, like, make dental this great thing. And one by one, all the carriers are like, oh, dental's like commoditized. It's like wicked stepchild. Like, we don't make money on it. We only write it because we have to, so we can get these lines that we want to write. So there's no money in it. So there's no money to invest in it. So please leave our offices. And like most startups, that's the point of the story. It's like, all right, guys, like we tried hard, like we learned our lessons. What should we do next? Instead, they're like, we're going to start our own insurer because we believe in this enough and we think that it's real, and they were right. So Beam and Branch, like I told both of them, like, can you please come to Massachusetts? I'm waiting.
Yeah, no. And, different, obviously different lines of business, right?
Yeah.
But also, I think different approaches as well. Beam had to do things quite differently just because of the way the market was set up and the distribution. Dental is predominantly a benefits.
Yeah, it's a group benefit story.
And like you said, like a lot of the dental that you get in your benefits is an afterthought. It's a throw-in.
Yeah.
I just noticed recently after getting my teeth cleaned, I like, oh, it's part of my healthcare. It's United, like United has the vision and the dental, like they're doing the whole thing
right
now. And when I went to the site, it was everyone in the company got the same price, whether you're old or young. There's everyone got the same price. Yeah. So Beam is bringing it's a challenge, right? You don't know for sure if in underwriting segmentation model will actually take hold? How do you sell that?
Yeah.
You know, but it is the right, like no one would deny it is the right way to do the underwriting. No one wanted to do it.
Yeah.
They may not even have had the data to be able to do it. And then they had to
No, they
figure out,
didn't.
well, that by itself is probably not enough. We need something to make this sticky. And in steps the smart toothbrush, which when I heard it, I was just like, eh. But as they talked about it, I'm like, it doesn't matter if it's
Yeah. As long
it's
as you
a
use it.
tool, and
Yeah.
people like playing with technology. Like
Yeah.
it is something that can make it sticky. And I was very impressed with an approach going into a bloody red market and finding the blue ocean within that to operate and getting that stood up. It was very
Yeah.
impressive.
And it's just a toothbrush. So like everyone knows how to use a toothbrush. They're using one anyway. It's why like from a wearable standpoint, the Apple Watch in particular has done much better than like standalone fitness trackers and other wearables where it's not something like you are wearing a watch. And while it can do lots of other things, it tells time and you get that already. So like you're starting from a place of understanding versus like you have to change all the thermostats and smoke detectors in your house and you need to install a camera. And like even if it's easy, people are like, do I have to do wiring? Do I need to call an electrician? Like you don't have to do wiring or an electrician for your toothbrush. You like and
Battery.
yeah, and like and they include the heads and the floss and the, like it's the whole oral care subscription. It just comes.
Yeah.
Like and this was to be fair, like people who use Amazon Subscribe and Save may not be thinking like, whatever. Like I've got a Oral B or a Sonicare and it's got Bluetooth and so I have a connected toothbrush and I subscribe to my oral care products already. Well, like this is 2012. Nobody did that. There was no Bluetooth in any toothbrush back then. There was no subscription service for like Quip is a subscription toothbrush service. Like that didn't exist in 2000. So these guys were ahead of a lot of things. And it like, so their early product, it's evolved a lot. Let's say that like it's much better than it was, but they actually had to pioneer on a lot of fronts. And I think that's really interesting. And it's a space where no one was doing any of that.
Yeah. It's so let's transition to other elements of the book, right? So I mean there's clear takeaways around those particular pieces.
Yeah.
How did what was your sense on them judging? We talked about Beam, Neptune, and others judging on sometimes mission isn't enough, right? How are you going to attack this? How are you going to go through it? Some of these people, was it this? Did you get the sense that everyone was going into something that they had some familiarity with, or did you bump into any where it was like this is new territory for them? They are just outsiders. And
no, for sure. And like this was one of the takeaways, but this was one of the presumptions is like, all Insurtech carriers or insurers, whatever MGA or carrier, they're started by outsiders who are like, oh, insurance is broken, I'm going to fix it because I'm not an insurance person. And like, as you know, from knowing these companies, a lot of them were mixed. They had a mix of people who were insurance and non-insurance. Like Steve like I guess is like hardcore insurance. While he was in college is when he started working at Allstate. So it's like, he's always been insurance. And Joe, while he was selling into insurance with his data and tech solutions, like he's not an insurance guy. So there's a mix. Jim Albert, yes, he was the CIO of a carrier for a few years before starting Neptune, but he's a technology guy. He'd been, like I think it was Accenture. So like he'd been in the tech side. He needed someone who was insurance. He was not insurance, even though he was familiar from working in the space a little bit. It's not the same thing. Jay Bregman, Thimble. Jay started eCourier and he started Halo. And then he was a drone enthusiast after his exit from Halo and started to think about this insurance problem. But like, he's not an insurance guy. And his co-founder was one of the co-founders of Quidsy. So like, if people don't know Quidsy, I highly suggest you Google it and read the stories of what happened there with Amazon. And if you've ever heard of soap.com or diapers.com, that was an Amazon acquisition. That was a very like dirty business story, how Amazon kind of competed them into a corner. Like it's just a fascinating business story. But like, these are not insurance people. The co-founders of Kin, who I have to say, I don't think I've said this to them, like they look alike. It's like two very similar looking guys who think alike and talk alike. And like they got introduced by a mutual friend. They had a couple of fintech companies, like they each had done an exit. But they're not insurance people, but they were looking for a space that needed someone to come in and disrupt and had the potential for a large impact. They said it's like, we both batted like some singles, doubles, but we were looking for a home run. Like, what's a large homogenous market where something is not working right and there's room to make a major change? So they came into insurance and had to bring that talent in because they didn't have the insurance skills. So it was a good mix of the two. So yeah, it's all over the place. Next is really interesting because they were like vehemently opposed to having insurance people. I mean, they weren't like angry about it, but they were like, we need to make sure we don't have like longstanding insurance people designing the product, making the decisions about what we want to underwrite, et cetera. We need that expertise advising us. So they worked with they had Munich Re Digital Partners, MRDP was really close to them and giving them advice. They worked with Parent Knight really closely. The team at ISOs was really helpful to them and how you rate policies. I mean, Sophia's like, this person at ISO like sat down with me to teach me how to rate. So they brought the expertise in, but in terms of designing the solution, thinking about what mattered, what they would go after, it was really important that they stayed free of any potential kind of closing in of the mindset from a past experience. And it's not a knock, but they gave me this really good example. It's like they had a really good program when they were just a digital agency for licensed professional trainers, personal trainers, sorry. And the backing, the carrier that they worked with for that had only done licensed, and I think maybe the term should be certified. I'm a certified personal trainer. I don't know if it's technically licensed, but like whatever. They'd only done this, one specific type of personal trainer. And that's fine. And that's what they're selling to. But Sophia was telling me, she's like, we look in the declines, we're seeing a really large percentage of non-licensed or non-certified personal trainers coming in. And she's like, well, why, we believe that there's a rate for everyone. Shouldn't we try to figure it out? Because like, there's just this huge market that's already coming to us. We don't even have to pay for acquisition. They're just coming in. Why wouldn't we try to serve them? And they went to the carrier and was like, what would you charge them? And like, oh, we don't write them. She said, okay, well, how much riskier are they? What would you have to choose? And the answer is like, oh, we don't know. We've never written them. It's like, oh, that's fine. Like, it's okay. There's nothing wrong with that, except that means you will never write them. And expand that out to anything else that you don't currently do. You have no room for growth or opportunity until you're willing to take that chance and learn. And that's a freedom of mindset, a willingness that Guy and the rest of the team made sure, like, we really don't want that guiding our decisions this early in our life cycle when everything is an opportunity. We haven't done anything. So if your answer is always, well, we don't know, we've never done that, then you should close down the business.
Yeah, I think that particular story, sort of encapsulates so much, right? That one aspect really shows the split between how I'm going to say how everyone outside of insurance thinks and how insurance professionals think. And it really gets to part of the heart of the matter when it comes to insurers that need to kind of evolve with this, is that their culture is just way too defensive.
Yeah.
That is just a classic example where there's not even an entrepreneurial mindset. There's no mindset. There's no growth mindset there. It's, we have never done this before. It's just, we're just going to toss it out. Whereas the outsider coming in is just like, just asking questions. Well, how do you know? What if there is a rate, right? Like there's clearly demand. They're looking for a quote. They're being declined. What if we could meet that? Like it's one of the big bridges, I think, that traditional insurers have to get over is transitioning from a defensive mindset to a growth mindset around that. It doesn't mean you have to throw the baby out with the bathwater. I think your first book kind of laid a foundation for how a lot of companies can execute in that environment. But if you're still stuck in a defensive mindset and you can't get to that growth piece, it doesn't matter how much you digitize. It doesn't matter if you move to the cloud.
Right. It's not
Like,
about when people are like, well, what technology? I'm like, it doesn't matter like what
doesn't
cloud
matter.
provider you
Yeah.
use or what API language. I don't even know if that's a thing. But
As
Nick,
a matter of fact, I think Joe Emerson from Branch, when I
Yeah.
interviewed him, laid it out, and it echoes in my head now. I think about this all the time in my day-to-day operations. He said we view code as a liability,
right.
and
Yeah.
to me that was just like, blew
Yeah.
my mind, because
And this is a technology, like he
that's a
started tech
technologist.
companies.
But
Yeah.
he even recognized technology is moving so quickly that no matter where he plants his feet down and says, this is the best tech, we are going to implement this, 5 years from now he will look stupid
Yeah.
implementing that, because there'll be some new technology. And so to him, he's almost future proofing
Yeah.
a lot of the business by making sure they're being outsourced. And I think he was the one that introduced me to the Twilio WhatsApp relationship, where WhatsApp outsources all of their communication technology to Twilio to handle. And like, that's a core functionality of what
Yeah.
WhatsApp does. But even WhatsApp recognizes, like, we don't want to have to evolve with the technology. This is just too volatile.
Right.
We think the Twilio team can do it. And I get the sense that, like, between Next and Thimble and Kin, and Branch, like, there's a lot of that mindset of trying to remain nimble
Yeah.
and forward thinking to kind of future proof their businesses. Did you get that sense as well?
Yeah. 100%. I would challenge everything that you just said in one way though. And that's like, it's this can't idea. Like, yes, it is a difference between, generally speaking, between the incumbents or people inside insurance and those outside, but it's not an absolute. And that's kind of like, and I know you're not really saying that because you're a traditional insurance person, but you're thinking much more broadly than that. So like, case in point with you, actually we can do this. It might be hard. It might be really different. It might be uncomfortable, and that's why, like I say, the books actually do apply more. It's not like this is the book that only startup people can read or people who want to leave an incumbent and do a startup, because we all actually have that capability. And I think regardless of which one you're in, a startup, an incumbent, or something else, you should be aware of this because this is going on. And you should ask yourself, well, what can I do about that? Like we did it at Hiscox. We looked at, when we looked at our claims, like what claims are we not covering? And is there something we can learn in that? And I know Next does that too. It's not just the declines to quote. It's also like, well, where are we not providing coverage where the insured came to us, which means they thought there was coverage. Maybe there were people like, oh, they're just trying to get it covered. Fine. But actually, by and large, people aren't just trying to squeeze things in. They thought they had coverage. They sent it into you. Turns out it wasn't covered. Even if they're cool with that, they still had an expectation. Can you learn something? We came up with a whole new kind of coverage to add to our GL just because of that. And it's like, it wasn't that much of a cost for us. Huge customer impact, huge expectation meeting impact, huge retention impact, and we could charge for it. So it had the right economics, but like, you don't get that unless you're looking at what you're not doing today. And, that was all insurance people who came up with that and claims people, no less, that were like, we keep seeing this. What do we do about it? And that to me is like a little bit of hope that you can't tell me because you're at this kind of company or in this role that you're somehow absolved of the responsibility to keep moving ahead. You might feel stuck. You might not know how to do that. And that's where like, well, let's keep talking about these stories. Listening to shows like this, like hear from people. I mean, I found it like the reason why I asked you to introduce me to those founders to get them in the book was I heard the interviews and was like, that's brilliant what they're doing. They're solving for things like Thimble. We've been trying to solve for that episodic idea for a while I was at Hiscox. I'm going to say that openly. I'm not giving anything away because Hiscox partnered with Thimble. That's in the book. Like they work with them because they knew we want to do this and we can't right now. So what do we do? Just give up on the market? Or do we say like, someone has a solution, we should get over ourselves long enough to recognize like, we're not serving our customers. What if we could work with them to solve that need? That is a very different kind of mindset. And that's one of the bigger kind of forward-looking things is around partnership and openness. And I think that's really, it's not about who wins, the startups or the incumbents. It's more like who wins together. and what can we take from each other and support each other with. It's a lot of hugging. Like, it's a very nice kind of.
Well, it should be like that, because
Yeah.
the way insurance is actually structured, it's not a winner take all business model. There's
It,
plenty of opportunities for us to
yeah.
partner on things, and there's no company that can just come in that has enough capital, just say, I want this market, I'm going to take it. Doesn't really happen. Just risk is too big, and
right. No one's eating 100% of anything.
Yeah. So,
and consumers don't want that. They there's different, as long as you're not all the same thing, just with a different logo, people do want different things. So there's room in the market to meet needs differently. Yeah,
completely. It's when I first started to investigate Branch and what they were doing, without knowing a lot of the stuff that I learned after the interview and so on, it was immediately became obvious. Like, people like to bundle, right? Like, bundling is a solution, and no one's talking. Like, none of the new Insurtechs are talking about it. When
a lot of them are monoline.
What's that? Yeah, Hippo and homeowners. Yeah. Lemonade has done some bundling, but it's disparate stuff. I'm not sure. Like, Auto's very new to them now. Branch has been right off the bat. They said there's an opportunity to bundle here, and of course, Steve would know, having been in the industry. A lot of consumers like to bundle. It feels better to have that one bill, right? That one package that comes in. Auto, homeowners, umbrella, it's all right there. Put it in my manila folder. I know where it is. I can pull it out. And so I think that's an important aspect of it.
And so, I mean, I've heard you when I first heard you talk about them bundling, when I was asking about them, I was like, bundling's not a big deal. I started Liberty Mutual, we bundled, and it was always like, it was cross-selling is how we talk about it internally. And it was like, you buy one thing and you also buy something else, which is not what Branch is doing.
Right.
And what they're doing is entangling, which is a terrible sounding word that, like, you would never go to market being like, hey, customers, we want to entangle. You'd be like, so, like, I can't trust you. Entangling, that doesn't sound good. But it's way deeper than what the industry has treated a bundle to be, if it's even doing that. Because, as you say, like, a lot of these startups generally are doing something monoline.
I will guarantee you, Lemonade's product is like, the Auto is separate. It's rated separately. Everything about it is separate. And
it's just
if you want Auto and homeowners together, you're basically getting two separate products.
You're buying two products, and if they're going to give you a discount, it's like a marketing decision.
Exactly.
Yeah.
Whereas,
which is how the industry's always done it.
What Branch is doing is it's one bucket, right? And I'm not sure a lot of the listeners will appreciate that piece of it, but you just get better economics. Like, that's one of the abstract elements that they brought to the table. Consumer doesn't give a crap, right, about that. Well, but it's one of, like, this is not like a pure tech-y thing.
No, it's not.
It requires some tech to kind of manage it all, but it's in a single bundle. You get proper portfolio economics. Like, you're optimizing the usage of your capital and capacity by doing that, whereas in a monoline that you put together, you're not. You're optimizing it for the individual products, but not together.
Yeah.
And for those that do like to add stuff, there should be a economic discount. That is back to your INA discussion when the first homeowners bundle. There was conflict around, well, will there actually be any economic benefit? And it turns out, it was significant. The bundling makes a huge deal when it's all together under one roof. And Branch is now just extending that Auto, homeowners, and umbrella, putting those together. They can get that bundle out cheaper. It makes a big deal. Customer doesn't know, they just see the price. But from the insurance industry, if you start thinking of all of the other lines, you start getting into commercial. Wow. Like, the bundle
commercials where it's happened.
Commercial auto, workers' comp.
But like BOP and commercial package, like, it happened to an extent in a little, in little meaning like the small business space, but not everything.
Yeah.
And it's the issue is like, and this is where it's so much more complex than just like we bundle and we give you a discount is, and that's like the acquisition cost is lower and the customer lifetime value should be higher because larger share of wallet generally leads to longer retention. So you can afford to cut the price a little bit. The issue for every single carrier out there is each one of those lines has a separate capital base, generally a separate reinsurance, separate administration, separate actuaries, products, people,
Filings.
all of everything. And at the group level, you get the smoothing because the losses play out differently, the capital's held differently, and all that. But each one of those capital buckets is separate and has a lot of ancillary costs and complexities and constraints that come along with that. And I know, having sat in the executive meetings where you're deciding like how much are we, business plan, we're going to grow this line, this line, this line, this line. They all have a different risk pool and capital base and reinsurance, and they have different costs of capital, different hurdle rates, all of that, different statutory requirements because they're not smoothed together. The group gets the benefit, but none of those lines does. And so we end up making, Joe was saying this in the interview, like these local maxima and not a global maxima. And so we like, I remember looking at this, like this line in and of itself, we shouldn't be doing it. But when we sell that, we always get these other lines, and the brokers would never talk to us if we didn't offer that. And these are really profitable, so we have to. And our CFO would come right back to like, but this line is not working. And he's right. But that's the wrong decision for the overall business. But because it's split out, those decisions become discrete. No matter how hard you try to make them global, they will never be, because there's always like return on capital's here, hurdle rates here. You need to stop doing this. And we can't invest enough here from a cash standpoint. Like we need to free this up and do that. Well, guess what? You do that, the brokers won't give you this stuff that you want to invest in, or the insureds won't buy it because you need it to round it out. When you pool everything, all of these related lines are in one capital base. You simplify the reinsurance, you simplify the administration, but your losses and your experience, your tail, it's all smoothed inherently. That changes your capital requirements. You're like,
Yeah.
it is actually really like, I'm getting jittery about it because like this is actually transformative. And I think people hear bundling and like, oh yeah, whatever. Been doing it for 50 years. Who cares? Like you don't understand what Branch is doing.
Yeah. And that's the take to me, the big takeaway, out of respect for your time. That's what you get. Like for each of these stories, there's those sorts of takeaways. There's more than nuggets. Some of these ideas are transformative in how they do that. It doesn't mean that it will apply across the board, but for someone, and I'm going to make a big push for this book as well, just to entrepreneurs out there, because I always say, I'm always like, who did something in a really hard industry? Maybe there's something I can copy there. And I think there are lessons here for the traditional entrepreneur, that they can take away for, this is how you do it in an area where it's highly regulated, highly capital. Like it may not exactly fit the market that you're going after, but there are definitively lessons here.
There's no lesson that's like, this is how you price risk, or like underwriting. It has nothing to do with that. So yeah, it's universal, and it's universal across startup or incumbent, across industry. It's a hard industry. There are a lot of complexities, and if you can make it in this space, like I think that's a pretty difficult threshold or bar to meet. So things that would help you here should absolutely help you elsewhere.
Okay.
Or at least inspire you to challenge yourself.
Yep. Launch date, is it
June 22nd?
June 22nd.
Yeah.
Pre-Kindle, is it available?
Pre-order on Kindle. You can pre-order actually any of the versions. I've set all that up, so like people can go and grab it now. It's future-of-insurance.com. I just found out from Audible though, the Audible version is up and available, so you can just go and get that if you want to hear me drone on.
Awesome. I did, when I moved to Florida, I did download your prior book on audio, and it was fantastic. So
you just got to listen on like 1.5x at least. I got a complaint from a guy's like, I listen while I run, and like my pace has gone way down. I'm like, you speed it up. It's a
Yeah,
book about
I
me
think
reading
I
about
I
insurance.
think I may have sped it up, but at that higher speed, I think I like Bryan even better.
Yeah. I like me better than too.
Bryan, awesome. The future of insurance. It's
Series.
it's the
It's a whole
series.
series now to take over
Yeah,
your life.
yeah. I can't wait for what's gonna come out for version 3 and version 4, and then we'll look back at version 1 and just like remember when.
As it
Uh,
won't be the yellow one. That's all we know.
that's right. It will not be
Yeah.
yellow. He promises. You guys all heard it. This is the contract. Bryan, thanks so much.
Thanks, Nick.